I'm Louise Bedford. I'm the best-selling author of 5 books on the stock market, and I'm so excited that you're joining us on Talking Trading today. I have got a very special treat with you, and every week you know that I aim to bring you something a bit different into your trading week. Maybe it's an interview, maybe it's a personal insight, maybe it's that market wrap that you love so much from my business partner, Chris Tate. Well, today I am going to be interviewing Erik Smolinski. Now, Erik and I have got to know each other over the last year, and I have really enjoyed our burgeoning friendship, and I'm sure you will too. He is the founder of esinvests.com. He's a Marine veteran. He's a trader for more than 15 years. He became a self-made millionaire before the age of 30, and he was raised in a single-parent household with quite humble beginnings. And I'm sure he'll talk to us a little bit about that as well. He had 2 mentors that selflessly shared outstanding advice in his younger years, and now he looks to pay it forward. I love that. We're going to learn all about Erik. I've asked Erik to share lessons from his background as a Marine and to let us gain an insight into the way his mind works. Erik, welcome to Talking Trading.
Thank you so much for having me. I'm stoked to see you again. And for those that see the video, we are both matching in red, which was not planned. I'm very pleased with that.
Yeah, we've got that meeting of the minds already. It's wonderful to see. So you can pick up the video on our YouTube channel, youtube.com/trading game. And of course, the audio is available on talkingtrading.com.au. Now, Erik, trading is something that most people hyperinflate in importance. They think that it's much more important than it is. It's not life and death. How do you keep trading in perspective?
It's a really interesting question because I think there's 2 sides of it. Like, you could argue it is life and death, right? Like, if somebody has a terminal illness and you don't have the finances to pay for it, that's a death sentence. But to your point, it's also just money. And it's very difficult to strike a balance between that. So I think of 2 things. The first thing I think about is really creating an emotional separation between myself and finances. So the money that I put into a trading account, I'm very careful to decouple my mind from like the hard work that went into it, how long it took me to obtain it, because that's when we tend to hold on to things a little too tight, and it's really difficult to compound anything in that setting. And then the second thing is, fortunately, my time in the military is super helpful for that, because you literally are thinking about life and death. And I think that that is a really helpful construct to frame not just trading, but the world. Like, if somebody cuts me off driving, I literally used to get angry. But then I started thinking about it, and it's like, it literally doesn't matter. And this is such an insignificant interaction. And I think the only way to really create that kind of healthy separation from finances is to be confident in your ability to make more. And that's something I've really thought about, is like you were talking about when you were discussing a little bit of my background. I didn't come from money, yet I've been able to figure out all different kinds of little things to do to make money. And as soon as you start approaching the world with that mind view, you kind of become more risk open, and investing your money becomes less of a huge endeavor. And then the last thing I'll offer people is, if you ever need motivation to think about investing, think about the opportunity cost. Inflation tends to track pretty high. And if you're not doing something with your capital in 10 years, the buying power of that capital has invariably decreased. That's a problem. So you almost can't afford not to invest. And based on that alone, it just forces my mind to find ways to cope with it.
Yeah, I love that. And it's not just that you've got that background in the military, you also have a significant background in martial arts. Now, I often hear from my systems tester, Scott Lowther, who has got a black belt, and my business partner, Chris Tate, who has a black belt as well. What the heck, I'm surrounded by you. That Be Like Water by Bruce Lee is such a good way to approach trading. Just let it move around you and move over you, and don't get too enmeshed in it. What are some of the other skills that you've been able to develop and that you suggest other people develop because of your time as a martial artist?
I think patience, it's so overused, but that is a really important one. And the cool thing I like about martial arts is I like to call it tempered patience, because you have to be patient until you see a reasonable opportunity. And then you really attempt to capitalize on that opportunity. So I think martial arts is probably one of the best possible displays of that. And then the other thing I would offer to people, I haven't met many martial artists that stay involved that aren't disciplined. And that discipline carries over beautifully into the markets, because when we're trading, especially as retail traders, it's just you behind your computer. Nobody is auditing what you're doing. Nobody's telling you log that trade, review this stuff. Nobody does any of that. So unless you choose to do that on your own, which you should, then nobody forces it. And then that leads to a whole breakdown in performance, acknowledging our shortcomings. And this leads to some of the most powerful trading statistics that you can find. I use SSRN a lot, which is kind of a website of research papers, but it talks about, the longevity of day traders. And as you would surmise, huge drop off in the first 24 months. But what actually surprised me is that drop off continues all the way out until 11 years. 11 years is when it stabilizes. And it's about 3% of the original grouping of people that actually start the endeavor. And anybody that lasts that long, you would better believe have been introduced in discipline under their own accord or under the market's accord, but it's the only way to adapt. So I think those are the two main things I would apply, is kind of that tempered patience, but then also discipline.
I like that. I think sometimes in the markets, it's almost like everything inside you is screaming at you to retreat. But that's sometimes where the best gains are made. I know for me, from a pyramiding sense, it sometimes doesn't feel right, in air quotes. It feels like I'm about to create a very big risky situation in my mind. How do you keep pushing forward when everything in your body is yelling at you to retreat?
That's a fascinating question, because the world of trading really is built around the interaction of yourself with yourself interfacing with the markets. And one of the things that I've learned to rely on pretty heavily over time is data. One of my favorite things to tell people is I don't trust myself. I don't trust myself, whether I should take a trade or not take a trade. I don't just believe whatever I initially believe. What I tend to do is try to leverage data. So data that I'm talking about is your trading log, which as a trader, you need one. Like that's all there is to it. You need a trading log if you're a trader. And I'll create just summarizations or summaries of different data sets so that I could say, like, hey, when this condition happens, this is the correct move. Regardless of how I feel about it, I know quantitatively this is the correct move. And the kind of perceptive follow-on question to that typically is, if somebody's a new trader, how do you create a data set? You don't have any yet. That, in my opinion, comes down to size. You start everything nice and small. And none of us do, because we're all super impatient. We're in a big rush. I know I was. But for the people that are willing to listen to that, you'll notice a couple things. You're going to limit the unnecessary drawdowns in the account, which have an outsized impact on your compounding returns longer term. But then the other thing you'll notice is that you start to build some confidence in your ability, one, to even track things, but then two, review what you're tracking to use that to inform your decision cycles. Because a big part of our efficacy as traders is the ability to identify patterns that you've seen before. And again, this is from a study I reference a lot called The Behavior of Individual Investors. And it's by Barbara and Odine. I read a lot of their work, and they're from University of California, Berkeley. And I love their work. And anyways, it talks about some of these commonalities, and that's one of them, is pattern recognition. So I think for traders to start to trust the data once they are able to build it, but then also once you've been trading for 5, 8 years, you can actually, in my opinion, start to believe your instincts as they start to emerge. They always have to be tempered, and they still have to be validated by data. But I think giving them an opportunity tends to work out well.
But people use gut feel so early, though. We're not talking about that they've honed their skills and then they're relying on their gut feel. We are seeing people in the very early stages going, I felt it would be right to go into this position. I think that can be very dangerous, don't you think?
uh, couldn't said it better myself. I couldn't agree with you more. And that's kind of the same thing, again, leaning back on the martial arts stuff. A lot of your gut feel, and for the two gentlemen you talked about earlier that have been in martial arts, they'll know exactly what I'm talking about, which is really common in jiu-jitsu. New people will try to grab somebody's head. It's just a gut reaction. If they're in any position, they think, let me grab this person's head. In their mind, we typically think, oh, we can control them. Funny enough, in jiu-jitsu, as probably one of the worst possible moves you can make on the chessboard, but it's that gut feel. So this goes back to me kind of expressing to people, especially early on, it is important to not trust yourself, because our minds are decision-making machines, and they look to offload as much thought as they can into automated processes. So this is where habits come up. And things like if you bite your nails when you're talking or click a pen because you just do that because you're nervous, all of those, they're automated. You're not thinking about that. So I think for those traders that find themselves, going off of gut feel before they've really developed an alignment between the gut feel that they're attempting to apply to the market, it's just based on all of their previous experience, which doesn't carry over well to the markets realistically. So I think it really comes down to acknowledging the fact, at least for the first 5 years, you're drinking from a fire hose, and the last person I would trust is myself.
Oh, completely. And a lot of our thoughts are actually below the level of our conscious mind anyway.
Right.
When we're talking about we're rational decision makers, we're not really. We're not really. Either we've educated ourselves into that process, or we're using a checklist or a trading plan. When we
Bingo.
wrote it, we were actually rational. In general terms, that spur of the moment feel that we go on is not a rational feel. I'm interested in your views on this. I know we've shared some of our family background together off air before, Erik, and you did come from a situation that resembled my own in many ways. You came from humble beginnings, you were raised by a single parent, and you had to make your peace with that. That can represent a variety of different issues and advantages as well. I'd like to hear your thoughts on how your beginnings has actually impacted your trading and your current behavior in life.
Yeah, it's an important note, and I think for most people, whether you start from single parent, whether you start from parents that are in crime, like most people that I've met in trading don't come from great backgrounds. And it's because we're all allured to the same thing, the ability to make a pretty sizable change in your life relatively quickly. That's not to say there's plenty of super wealthy people, but a lot of the traders I meet fall into that first bucket. And I think there's really two things that I would highlight. The first one is the drive, right? You think about the way that I saw my mom taught me how to answer the phone for the debt collectors because she didn't want to talk to them. And I'm sitting there thinking, I don't want to do this. This seems awful. And you also think about the things like I'm the one that retired my mom, right? Like I pay for her mortgage. I bought her a car. And all of that started from that early understanding that, she sacrificed what she did just to make sure that my brother and I had food to eat. We had a school to go to. We had a life, at least to start from. But seeing the way that she lived her life looked just not super appealing to me. So I wanted to change not only my prospects in life, but also hers because she sacrificed so much. So that's the first part about it. And then I think the other thing, I was actually thinking about this the other day because I just bought another car. I'm a car guy, so I like cars. And I already have like a couple plate cars and I bought another one. And I think going through that growth process is so freaking rewarding because I think I actually feel bad for some people that grow up in really impressive means, because the ability to buy your first car might not even feel like much. And that's not their fault, right? They're born in fortunate circumstances, which is awesome. But that feeling for them is skewed, right? Like we were talking about the relationship with money baseline. That also happens with experiences and different things that we choose to spend our money on. And, I feel like having those beginnings really allows me to appreciate the different moments in my life. It's even, simple as the house that I live in now. I live in a $2 million house. At no point did I ever think, I literally still think like, what the hell's going on right now? It's all fake. But so it makes those moments just really, really valuable to me. So I think those are the two things. The first thing is the drive. It really forces you to look for opportunity and then to obsessively cling on to it when it's there. And then I think the second thing is the scale, to like just enjoy the human experience.
I've definitely found the same thing. My daughter, the other day, I said to her in the car, I said, isn't it amazing that we have a house that has heating and cooling? I mean, that is just incredible to have such a climate controlled life. And she said to me, oh, Mum, your bar is so low. It really is. Yeah, one of the things that I want to pick up on is you were talking about what things do you want to move towards and what things do you want to move away from? And I think that is something that we really do need to consider. I want to highlight something for you on some research I've been reading. There are things called approach goals and things called avoidance goals. And in a little story, Alison Felix, who is one of your amazing track and field athletes, in 2012 at the Olympics, she was in a series of a cluster of not wins. Okay, so she's like, oh my gosh, I just can't do this. It is driving me crazy. And apparently what was going through her mind as she lined up for that starter pistol was, I just don't want to lose. I don't want to lose because that's really embarrassing. She won, but she felt awful because she had an avoidance goal. That wasn't something that was an approach goal. An approach goal that she actually changed her views on was, I want to win because I want to feel fantastic. I want to encourage other people who are in my situation to say that they can do it as well. And I want to be a spokesperson. She had a particular situation where she was pregnant. She had to hide her pregnancy because she was worried about losing sponsorship. She had that as an approach goal. Now, even if you haven't read that research, Erik, I'm curious to hear about your views. Do you think you've got more approach goals or do you have avoidance goals because of your background?
It's really curious. And I actually have one quick question for you on that based on what you read. Is there a variance in efficacy behind approach versus avoidance goals? It sounds like in that scenario, we know that, but I'm curious in the body of research if there's a clear trend.
Yes. So it's not in terms of the outcome, but it is in terms of the way you feel after you've achieved that outcome.
Oh, interesting.
And yes, isn't it? And also, if we extrapolate using this as that feeling that we get as traders, which can drive us on to continue. And we know the longer we stay in the markets, the more longevity we have, the more likely we are to be a trading success. So if we can foster that feeling of accomplishment, that feeling of being capable, my guess is that we'd stay around longer as a trader. Therefore, we'd be more likely to experience trading success.
Yeah, I think it's interesting, and I honestly have never really thought about that, like especially in terms of like my own perspective, if I'm using avoidance goals or approach goals most frequently. But I'm trying to think about the different like reaction I get. And I definitely would value if I set my mind to something and I accomplish whatever that is, as compared to the null, right? Which would, in this case, would be an avoidance goal. But I also think about like different instances in my life where an avoidance goal was a pretty big driver. Like my dad, I think he died like 3 or 4 years ago. He was just an alcoholic and he drunk himself to death, and he was in his early like 60s. And I definitely, that's an avoidance goal for me, is like I didn't want to fall into that same lifestyle, because even the last 30 years, like he wasn't mobile. Anyways, the point being, I think that kind of avoidance goal has actually been a pretty big motivator for me. But I had somebody frame it for me in a fascinating way, where this was one of my ROTC instructors when I was in college. And he said, sometimes like the biggest lessons we come across in life are from the worst examples. So I think the way I started to picture that scenario with my dad was less of, I don't want to be like him, but I think it started to turn more into, that's like a prime example of what I don't want to be. This is the alternative of what I actually want to be. So it's almost like using an avoidance goal to create an approach goal. But I agree with you in general. Like, I think looking at most people's experience, especially like high performers that I've connected with, it's very much approach goal driven. And I think it's for good reason, because also once you start getting that confidence of, okay, I set this goal and I hit it. I set that goal and I hit it. You start to almost feel like you have a right to achieve more. And it's because you're kind of creating this body of supporting success stories. But yeah, it's a really curious question. I'm super stoked that you brought that up. I actually want to read that study. I love stats and whatnot, so I'd love to check that out.
I've written an article about it. I'm more than happy to send it to you.
Yeah,
I
I
want
would love
to
it.
go further into this with you, because there's so many similarities here with your mindset and with what I've also experienced. Just for the listeners that aren't familiar with this, and I know Erik and I have talked about this in the past, my father was also an alcoholic, and I had my parents' best man, Paul Wynne Evans, who, to his absolute credit, it must have been difficult for him to raise this with me, but when I was about 14, he saw that I'd started to hang out with the wrong type of people, the wrong group, drinking a bit much, potential for drugs. And he took me aside and he said, look, this is up to you. You can break the chain or you can continue on. And I can tell you, daughters of alcoholics either marry an alcoholic or they become an alcoholic themselves. And you right now are in line to do both. So it's up to you whether you break the chain or not. This is up to you. This has got nothing to do with your family, nothing to do with what they have shown you. It's up to you to decide. So I think, Erik, you and I, we keep finding these similarities.
Yeah, that's powerful.
Was a turning point for me, absolutely. And you started from a fairly young age having this view. You've told me about the importance of compounding and how important it is to start early. Tell me more about your thoughts, because I know we've got quite a few traders who are on the younger spectrum here. I started trading, well, my very first trade was when I was 16, but that wasn't actually legal, was it? So we'll pretend I was over 18. But when I started trading effectively, it was from the age of 20 onward. What would you say for people who need to start at a younger age because they have this burn inside them that they want to achieve more?
Yeah, I think compounding returns, they're probably the best kept secret, because when I talk about my trading, I'm not like this super high performance trader. Like, I've never had 100% year, which is like super. If you look at the US investing championships, you'll find people with 400% years. That's not their average over time. But the way that I would frame it to people is, the earlier you start, the worse you can do and still achieve what you want. Right. So if I choose to start, I started when I was in high school, all the same. I had a custodial account. And if you look at somebody, even like Warren Buffett's returns, he's about a 20% CAGR, depending on what time frame you look at, a little worse after last year. But that 20% compound annual growth rate is very good, but not compared to the US investing championship levels and things like that. However, he's been doing it forever. literally decades. And that is how he started creating this stockpile of wealth later in his life. So for the people that are maybe just starting off or thinking about it, what I would be doing if I were to start all over again is I would start with buy and hold investing. Sounds super boring. I would get into an index ETF and I would paper trade. I would use fake money to practice this trading skill set that I think I want to deploy. And then based on my performance in that paper trading, I would make a choice. Does this make sense for me? Does this not? But what you've already done by buy and hold investing is you've started that compounding clock. Because right now, my compound annual growth rate from 2007 until the end of last year is low 20%. It's like 22% or 24%, which again is still, I'm super proud of that. That's really an effective amount of money. And it comes down to a math problem. You take a look at where you're at right now. You go into a compound growth calculator and you say, if I start with $10,000 and I earn 20% on average year over year, this is my runway, 30 years. And if you start that at 20, take a look at the number. You're going to like it. And you can start to amplify it. You could say, well, I'm actually going to save more. I'm not going to just put this one amount of money in and never touch it again. And then all of a sudden you realize that what I would consider to be outlier performance, that's why that's part of the branding on my channel, is to be an outlier. But in this instance, you don't actually have to have this crazy, insane top line performance. I enjoy trading, but I never forget what role it fits in my world. And that is to enable me to do all the other stuff I like to do, to buy the car that I was telling you about, to go scuba diving, to go travel. That's why I trade, to enable my life. Trading is not my life in and of itself. So for the people that are starting, take a look at a compound growth calculator and see what starts to make sense for you. But the other thing I'll end with is if you start later, the pressure's on. And I have not met literally anybody that invests that started when they're 35 ever, plus 35 plus anything, that literally has said, oh, I'm glad I started now. Never heard it. And it's because the longer you give compounding returns an opportunity to work, the better off you're going to be.
Yeah, absolutely. And a lot of what you're saying is echoed by the market wizards in the Jack Schwager series of books. Tom Barso, I was just talking with him just before we on this call actually, and Tom was saying about how he never took offense with this, just for the record, but Jack Schwager said, well, Tom's really not that impressive. He really didn't make massive amounts of money. He really wasn't an outstanding performer, but he kept his life in balance. He's done it for so long, and he's been able to have a successful marriage, a successful life outside of trading, and continually get good returns from the market. So that makes him probably the most successful person I've ever interviewed. And I think what you've said there echoes Tom's thoughts.
Yeah, I've actually talked with him before too. He's a really, really cool dude. And I think it comes down to just a thought process on overall scale and then viability. Is there the potential for somebody to have those kind of lotto wins where they take $10,000 and it turns into $100 million? It's there. It can happen. And I think it's actually really important not to artificially constrain the mind into thinking it's impossible. But I believe in probabilities. And what I always thought about is, like, for example, I just threw it up on a compound growth calculator. $10,000 over 30 years at a 22% return is $3.9 million. So you can play, and that's not adding a penny to it. That's just year over year. So if you think about different permutations of that, you can start to understand how impactful it can be. And for somebody even, like Tom, I totally agree with that, because for me, I would rather accept a slightly lower, like if I never have $200 million, I genuinely, not even like setting my expectations, I genuinely don't think I care. So I wanted to pick something that would come early enough and be impactful enough that it's worth it. So, and it doesn't have to be super insane returns. You can have something that's an effective return that you can consistently hit. And to Tom's point, and so far to my experience, it can essentially set you up exactly how you want to be set up.
But you don't just rely on trading either. You've
Mm-mm.
got several sources of income, which is interesting. Some people tell me, and I do as well, that you should only really have one fastball. You shouldn't have a plan B because then you can focus on just that. I would like your thoughts on that. Should people have a plan B? How do they reconcile all of the different potential investments that are out there? Should they focus on one thing?
It's a good question. And the way that I would offer it to people is, in the example of a fastball, if the only way you make money is through your fastball, what happens when you lose your arm? What happens when a silly accident happens and changes everything, that's no longer viable? And it's actually why you see people like comedians. Kevin Hart, he's a pretty big comedian out here. And he's doing movies now. He's doing his comedy gig. He's selling things. He's starting a radio station. Like, it's very purposeful. And even when it comes to trading, I apply some of the things I learned in the military, actually. We have things called a main effort and then supporting efforts. So for me, the main effort is exactly what it sounds like. That's kind of like my primary bid for success. It's how I intend to accomplish this goal. My supporting efforts exist in case the main effort doesn't work. Life, especially when we're talking about this compounding calculator analogy, life, as most people know, it is short and it's unforgiving if you squander your 20s. You're trying all these different things, or you're trying only one thing, and whatever combination is doesn't work. That's a problem. It's a big problem because you've just set yourself back huge, bigger than you think, because of compounding returns. So I am a big advocate of a main effort and then supporting efforts, ideally things that have synergies between one another, right? So my main effort definitely is investing and trading, but then a supporting effort of mine is real estate investing. Different, not that different. It's close enough that I can make a parallel, but it fits into the broader picture a lot better. Same thing with angel investing. It's very different. It's essentially, depending on what kind of angel investing you're involved in, there's different structures, but it's researching a company. I do that in investing. It's not that different. So I think finding the YouTube channel I'm doing, it's talking about investing. So all of these different things, they're slightly different in their nature, but they run off of a similar catalyst. So it's not this huge energy outpouring of me to provide this other source or access this other source of income. So I think having a main effort is super important, but I do think that if we go through our wealth development phase or even wealth maintenance phase with the idea of only having one modality, it's only one change away from going away. As soon as algos can crack this trading code, traders are gone. Every trader is gone. The edge is now gone. And I personally don't think it's going to happen, at least for a long time, because like you were talking about before, markets are imperfect because they're made of people. But nonetheless, that's a real threat. And if you're a trader that doesn't think about that threat to your way of making money and have other things in line, you're going to be sadly mistaken when the day does come that things do change. And then all of a sudden your way of doing things doesn't work anymore.
And what you're talking here is about emotional flexibility. I've got a trader with a particular situation, and I really want to ask your advice. He's an ex-army guy, very much entrenched in the army way of life for 28 years. He suffered PTSD, and as we know, PTSD has such a debilitating effect. It can be seen in an MRI. It's actually a brain alteration. This is not just something that is trivial. This has an impact on concentration, on future focus, and also identity. Now, he is finding that switching from being a part of the army to being something else is very, very difficult. He wants to call himself a trader. He hasn't got enough experience to say whether he's going to be, I'm going to put it out there that I don't think you can say that you're ever good enough in the markets. There's always things to learn, but he's worried about giving himself trader as a title in case he doesn't do well in it. So therefore the identity threat is there as well. What would your advice be to somebody who is from that army background, who is struggling to find themselves a new identity once they've left the army?
Jiu-jitsu.
Ooh.
Yep, I know. Sounds weird, but I think jiu-jitsu is probably the best possible thing. If that doesn't tickle their fancy, just getting into some sort of physical activity around other, doesn't have to be like hyper alpha type males, especially for this dude specifically. But I think getting into some sort of physical activity around other dudes is so important. And because the problem is to his point, right? I think it sounds like he's placing a lot of emphasis on these identities. It sounds like when he was in the army, he identified his human being identity as army. And still, he was still whoever he was. Army is just a part of it. And it's the same thing with trading. Trading is just a part of it. So I think attempting to hinge, your entire identity around like one thing is probably going to set us up for failure in one way or another. Again, using the other examples from before, God forbid something awful happens and he can't trade anymore. Well, now his identity is now gone again, and that's a huge process to go through. So for me, I think getting involved into different things make a lot of sense, especially for somebody like that. And the reason why I say jiu-jitsu, it's a very intimate expression. And in terms of physicality, it can be very physical if he has that side of him and he needs to get that out. Or it can just be very technical and very mind, chess, physical orientation, which that might be right for him too. So I really like jiu-jitsu for that reason, is because it offers different flavors of an experience. And then the other thing that's just super important for him or anybody else with PTSD is just maintain connection to other veterans. We're all out there. We've all gone through our different experiences, and we want nothing more than to support one another. And depending on where he's, located, there's going to be all sorts of veterans groups available to him. Depending on if he's in Australia, depending on where there's good surfing groups out there, good fishing groups if he likes to fish. There's all sorts of things we can get involved in, but I would definitely do my absolute best to avoid attaching my identity to something external. And I would think about crafting my identity around internal things. So things that I identify with that I'm very proud are things like being a good friend. I'm very proud about contributing to a community, and I can control those contributions. I also thinking about things like embracing discomfort, looking for challenges. Like I like to do cold plunges, like being in air quotes. I don't like them, but I like the mastery that starts to force over my mind. And again, that's another thing I can completely control. So I would encourage him to focus on crafting his identity around things he can control versus things he cannot control.
That is just brilliant, because this internal versus external locus of control guides so much of our behavior. I think as traders, we really do need to sense that responsibility rests on our shoulders and to do everything within our control. But some things are outside of our control that we cannot control. We need to recognize what those are and not take responsibility for those. So yeah, your answer is very insightful. I think it's also interesting that with your background in discipline, that you've been able to convert that into other areas of your life, because often the way we do one thing is the way we do everything. I want to talk a little bit more about that type of training. I understand that medics in the army are taught in battleground conditions. So there are people yelling, there's noise, there's smoke, and they're expected to operate on somebody in that particular environment. I've noticed the same type of training for my children when my children are going through an exam. The child that set the alarm to say this is the amount of time I have for the exam, it's under exam conditions, no food, no interruptions, no noise, just do the practice exam. That child did extremely well. So training under the conditions that you are expected to perform in later can be a big advantage. Can you tell me your views about that?
Yeah, I think that's spot on. And the other thing I would offer in addition to that is, especially pertaining to the medics, those medics, they're not thrown into that, right? Like they didn't just come say, I want to be a medic, and now that's the environment that they're trying to operate in. They've had classes, they've had people instruct them, they've had practical applications. So I think a really important aspect of kind of training in the environment you intend to operate in is scaling up to it. One of the most disenfranchising things in jujitsu or surfing or a lot of these other things is you see people doing it and it looks effortless. It looks relaxing. It looks cool. And then when you try it for yourself, you realize it's really freaking difficult. And if you go into it with the expectations of, oh, I'm going to do that and it's going to be fun and easy, no, it's not. So I think building up to the environment that we want to trade in is really useful. So in this example, that's why I'm a huge advocate of paper trading. It will never fully replace real trading. You're never going to get the full emotional focus. Like it's all going to be different from an emotional and even a fill perspective on the platforms. It's different. But just because it's not a perfect replication doesn't mean there's not a ton of utility in it. You're still going to go through the process of finding something, clicking the buttons, thinking about what do I need to look at here to focus on. So I think attempting to get as close to the conditions you're going to be operating in are about as important of a thing as you could possibly imagine, especially when you're around things that make you stressed, uncomfortable. If there's something that you value a lot that's on the line, aka money, what I tell people, I actually joke with my wife about this, is like when people are uncomfortable, they're introduced to versions of themselves they didn't know exist. And most people, they have such a skewed understanding of themselves because they live a pretty comfortable life. You might go through periods where you didn't eat for a while and you're kind of hungry, but there's very few people that go for week periods without eating and like truly understanding that discomfort or not sleeping or the stress of a really kinetic scenario or going on around you like those medics. So I think attempting to build up to scenarios like that with the understanding that it's different and you're not going to be able to operate at an optimal level right out of the gate, but you can work up to it. I think that's the name of the game.
And tolerating pain. Erik, I know one of the times that you just shocked me so much is I said to you, one of the quotes I love and I try to live my life by is Ovid, someday this pain will be useful to you. And can you tell me about your background with that quote? Because this is hilarious.
I have it tattooed on my chest. So when I was first going through some of my early life trials, and especially like when I was early in the military, that was a quote that one of my mentors shared with me. And it taught me a completely different perspective on pain. I literally, in my mind, when I experience pain, more often than not, it sounds slightly masochistic, but it's really not. It's just kind of accepting something that's there that I can't control. But it's like, I earn this pain. Whether I do a hard workout and it's painful, or if I make a mistake and I cut myself or whatever the case is, like that pain still is mine. So I think understanding the context around not just physical pain, but emotional pain, psychological pain, and creating a different relationship with it really creates a robust mindset. And I think it really applies to trading heavily, because one of the things I notice for people is just about anybody that's traded for a while, they can handle a down day. They can handle a down week. If they had a bad month, that'll still brush off. It's in a big scope. What people start to struggle with is when they had a bad 6 months, or they have a bad 9 months, or a bad year, or a bad 2 years. And there's other people that are just crushing it. So you have this benchmark of tremendous success and you are down, not doing great. That is very difficult to navigate. So I think creating a just healthy acceptance of discomfort, not limited to, again, physical pain, but just all of those wider ranges of discomforts, they really make it easier to operate in uncomfortable environments, but remain uncompromised.
I love it. Erik Smolinski from esinvests.com. How can people find out more about you and give us an idea of some of the resources we can discover?
For sure. Well, I'm on Twitter at esinvest and also YouTube channel at esinvest. I run a free Discord for people that just like being around other traders. The main thing that I try to provide to people is just kind of pragmatic investing and trading content. It is very trader focused for sure. So I trade derivatives, but things you'll find in my Discord group, we do a monthly discipline challenge. So right now we got a bunch of people signed up that are doing 25 push-ups every day straight and reading 5 pages of a book. And they're reporting. So we do, and it's not stuff I come up with. I talk with the community and I say, what do we want to focus on? But I try to create a community of people that are seeking to not be average, but they're looking to be above average, or again, what I like to refer to as an outlier. And that's the main thing, is just connecting people, not just with my approach to creating wealth, but a community and folks that are doing things their own ways, but with a similar goal in mind.
Erik, you are one of my favorite people to interview ever. I have loved this interview. Thank you so much for your time.
Oh, I'm humbled to hear that. Thanks for having me.